While you've been sleeping on VeChain, institutional money has been quietly positioning themselves for what could be the most significant supply chain revolution in crypto history. VT just flashed a technical signal that has derivatives traders going absolutely wild, and the numbers I'm about to show you will completely change how you think about this project. But first, we need to talk about the elephant in the room that nobody else is covering. VeChain is trading above 25 cents right now, and while that might not sound earth-shattering to you, the institutional adoption happening behind the scenes is creating seismic shifts that retail investors are completely missing. We're witnessing something unprecedented in the blockchain space. VeChain isn't just another altcoin trying to pump and dump its way to relevance. They're systematically building institutional-grade infrastructure that's catching the attention of trillion-dollar corporations and regulatory bodies worldwide. The derivatives market is painting a crystal-clear picture that smart money already knows something we don't. VT's futures-weighted funding rate just spiked to 0.0113%, and it's holding steady. For those who don't trade derivatives, this means leveraged traders are paying premiums to hold long positions, signaling massive bullish sentiment brewing beneath the surface. But the technical setup is just the beginning. The real story is happening in boardrooms across Wall Street, where institutional players are recognizing VeChain's proof of authority model as the backbone for next-generation supply chain management. Academic researchers are publishing papers that validate what many of us have suspected for years. VeChain isn't just building blockchain technology, they're building the infrastructure that will power global commerce for the next decade. The timing couldn't be more perfect. While Bitcoin maximalists argue about digital gold and Ethereum developers debate scaling solutions, VeChain has been quietly solving real-world problems for enterprise clients who move billions of dollars in goods across international borders every single day. Now let's dive into the technical analysis that has professional traders positioning for a massive move. VeChain is currently sitting pretty above both the 50-day exponential moving average at 2 cents 45 and the 100-day EMA at 2 cents 48. This isn't coincidence, this is institutional accumulation in plain sight. The relative strength index is reading 55 and climbing, indicating that buying pressure is intensifying without reaching overbought territory. Smart money loves this setup because it provides the perfect entry point before momentum really accelerates. But the most compelling signal is coming from the Bollinger Bands. The bands are compressing dramatically on the daily chart, indicating that VeChain has been consolidating in an increasingly tight range. When you see this pattern combined with rising funding rates and institutional developments, you're looking at a textbook setup for explosive price movement. The bands are pointing toward a 32% breakout target of 3 cents 38, and every technical indicator is aligning for this move. The moving average convergence-divergence indicator is currently hovering around the zero line, which might seem bearish to amateur traders. But experienced analysts know this sideways MACD action during tight consolidation is exactly what you want to see before a major breakout. It's like a coiled spring waiting for the right catalyst. That catalyst might be closer than you think. VeChain just launched something called StarGate on July 1st, and the numbers are absolutely staggering. 5.8 billion VT tokens have been locked into smart contracts in less than 2 months. To put that in perspective, that represents billions of dollars in value being committed to VeChain's new institutional staking architecture. StarGate isn't just another DeFi yield farming protocol. This is a complete reimagination of how institutional staking works in the blockchain space. They're using non-fungible tokens to track staking positions, creating unprecedented transparency through on-chain minting and verification. This means every staking position becomes a tradable, portable, and composable asset that institutions can integrate into their existing treasury management systems. But the real game changer is VeChain's partnership with BitGo for regulated custody and insurance-backed safeguards. When you combine institutional-grade custody solutions with blockchain-native staking mechanisms, you're creating infrastructure that traditional finance companies can actually use without violating their risk management protocols. Academic validation is pouring in from unexpected places. A recent study published in the International Research Journal of Modernization and Engineering Technology and Science specifically highlighted VeChain as a real-world example of blockchain solving supply chain inefficiencies. The researchers pointed out that while most blockchain projects struggle with static smart contracts that can't adapt to real-world operational changes, VeChain's approach addresses these limitations head-on. The study reveals something fascinating about current blockchain adoption. Most supply chain implementations fail because they rely on rigid smart contracts that can't adjust to the unpredictable nature of global logistics. Companies end up with automated systems that create more problems than they solve, leading to disputes and inefficiencies rather than the streamlined operations they were promised. VeChain's proof of authority consensus mechanism is being recognized by financial markets researchers as the optimal solution for sustainable finance reporting. A separate academic study on blockchain-enabled ESG reporting in U.S. financial markets specifically praised VeChain's model as practical infrastructure for the growing demand for environmental, social, and governance transparency. Think about the implications. ESG reporting is becoming mandatory for publicly traded companies, and blockchain-based verification is emerging as the gold standard for credible sustainability claims. VeChain isn't just positioned to benefit from crypto adoption, they're positioned to capture value from regulatory compliance requirements affecting every major corporation in the developed world. The institutional money flowing into VeChain isn't speculative gambling. These are strategic investments from organizations that understand the multi-trillion-dollar supply chain management market is undergoing digital transformation. When companies like IBM Food Trust are already demonstrating blockchain's capacity to increase accountability in logistics systems, early movers in the space are positioning themselves for exponential returns. But the most compelling aspect of VeChain's current position is the convergence of technical and fundamental factors. The 32% breakout target isn't just a random Fibonacci level, it represents a critical resistance zone where previous institutional accumulation occurred. Breaking above 33 cents would signal that the next wave of institutional adoption is beginning in earnest. The derivatives data tells a story that mainstream crypto media is completely missing. Professional traders aren't just betting on VeChain's price appreciation, they're positioning for a fundamental shift in how blockchain technology integrates with traditional business operations. The rising funding rates indicate that sophisticated market participants believe VeChain's institutional adoption narrative is about to accelerate dramatically. Consider the timing. Global supply chains are facing unprecedented challenges from geopolitical tensions, climate change impacts, and increasing regulatory scrutiny. Companies need verifiable, transparent, and adaptable blockchain solutions more than ever before. VeChain's combination of enterprise-ready infrastructure and academic validation creates a perfect storm for institutional adoption. The 200-day exponential moving average at 2 cents 65 represents the final technical hurdle before VeChain enters confirmed bull market territory. Once VET breaks and holds above this level, the supply zone congestion at 33 cents becomes the primary target for momentum traders and institutional portfolio managers alike. What makes this setup particularly compelling is the multi-layered validation occurring simultaneously. Technical analysts are seeing bullish patterns, academic researchers are publishing positive assessments, and institutional infrastructure providers like BitGo are integrating VeChain into their service offerings. This convergence rarely happens in crypto markets, making the current opportunity potentially historic. The cryptocurrency market is evolving beyond speculative trading toward utility-driven value creation. VeChain's institutional adoption strategy positions them perfectly for this transition. While other projects chase retail attention through marketing campaigns and celebrity endorsements, VeChain is building the boring but profitable infrastructure that trillion-dollar corporations actually need. The 32% technical breakout target represents more than just a price prediction. It signals recognition that blockchain technology is finally ready for enterprise-scale implementation. The academic validation, institutional partnerships, and technical consolidation pattern create a compelling investment thesis that extends far beyond short-term price speculation. Keep watching those funding rates, monitor the StarGate staking numbers, and pay attention to any additional institutional partnerships VeChain announces. The setup is primed for significant movement, and early positioning could be extremely rewarding for patient investors who understand the long-term value proposition. Crypto disclaimer: this video is for educational and entertainment purposes only, and should not be considered financial advice. Cryptocurrency investments are highly volatile and speculative. You could lose all of your invested capital. Always do your own research and consult with qualified financial professionals before making investment decisions. Past performance does not guarantee future results.